Good afternoon, Your Excellencies, ladies and gentlemen, and the carbon curious of African Energy Week. Yes, so welcome to this conversation on the financial tools helping shape Africa's energy future, carbon offsets and renewable energy certificates, or RECs. These are no longer side projects. They are finance-grade instruments, unlocking capital, reducing risk, and strengthening energy sovereignty. So I'm honoured to be joined on stage by South Africa's foremost experts in exchange-traded carbon and renewable instruments. But first, if you'll indulge me, a little context to this session. As NJ Ayuk so well reminded us yesterday, is Africa's time to industrialise and build a self-reliant, energy-rich future. So carbon credits and RECs are a part of that future. They turn Africa's carbon sinks, renewable potential, and methane abatement into real value. So while meeting global decarbonisation demand, and here's the key, these are energy addition. I know we've heard a lot of that over the last 48 hours. Energy addition markets, not just transition markets. Every dollar builds new capacity, renewables and oil and gas portfolios, clean cooking, CCUS, all while sustaining Africa's growth. For operators, this is practical. Methane and flare credits protect margins, RECs clean scope 2 now, and as CCUS scales, crediting frameworks bridge the gap. So I think the momentum's clear. Compliance markets already exceed $850 billion, that's carbon compliance, and voluntary demand could hit $40 billion by 2030. Aviation alone may need 2.5 billion credits by 2035, and these markets are converging, and we'll touch on that a little bit today. Voluntary and compliance systems are coming together as standards tighten and Article 6 frameworks mature. Credits issued today under strong rules will remain relevant tomorrow. So just to bring that all home and center on this conversation before I conclude, just before we pass on, exchanges make this real. They turn bilateral deals into the transparent markets with onboarding, escrow, and due diligence that gives corporates confidence. We see it in the South Africa carbon tax driving offset demand, in Corsia shaping aviation credit flows, and in Article 6 enabling cross-border trades with corresponding adjustments. Carbon credits and RECs measure different things, of course. 1 tonne of CO2 emitted versus 1 megawatt hour of renewable energy. I think we're all aware, but they trade on similar rails, creating efficiency and trust. So that's the opportunity before us. And today, I'm pleased to say, we'll be stress testing 3 pillars around Africa's carbon renewables markets and what they must deliver on. So that is liquidity, real trades and price signals, not just listings. Interoperability, supply demand across different jurisdictions and guidelines visible at the point of trade. And finally, scalability, cutting friction without cutting integrity. All of that to say, we get these right. We don't just build markets, we build trust, we unlock finance, and we accelerate Africa's green industrialization. So I will very much pause there, get down off my soapbox and pass on to the real experts on stage today. So without further ado, let's dive into liquidity as that first pillar. And I think, as I said, it's listings, it's trades, it's price discovery. So how do we define real liquidity in Africa's carbon and RECs markets? And Heather, let's perhaps start with you on the standard side of things. 2 questions for you in quick fire. One, if you'd like to tell us a little bit about Verra, the role of Verra as the world's largest carbon standard, and your role within Africa. And then also linking to liquidity, you've run auctions, you've partnered closely with exchanges. How do these models work together to give sellers price signals and buyers confidence?
So good afternoon, everybody, and thanks, Dan, for inviting us. And thanks for spending some time with us this afternoon. So my name is Heather McEwan. I'm based in South Africa, and I represent a company called Verra. And Verra is an NGO based in America, and we are the largest carbon standard. We have issued 1.3 billion credits, and we have about 50 methodologies which sit underneath the standards document itself. So a project would come to us and they would follow the methodologies, which is the way of calculating the greenhouse gas emissions from before their project to when they're running their project. And they would validate and verify their project with us through, at the moment, a manual process, which will shortly be digitized, and I'll talk about that a little bit later. And then we would issue the credits into their registry account. So in the old days, you just had a couple of standards and registry accounts. We didn't necessarily have exchanges and platforms. And now we need these registries and platforms to start talking to each other so that we can start moving these credits around. I do need to state at the outset that Verra does not trade. We ourselves don't trade credits. So we kind of mint or create the credits, with the project developers, but we don't get involved in the trading. The project developers have to sell them themselves. That's not to say, as Dan was saying, is that we don't sell, but we do work with exchanges. And recently, I think it was last year in Dubai, the Saudi Arabian system that they're setting up, carbon market system, did auction a whole lot of our credits. And that does send a very positive signal to the marketplace because they can see what are those credits selling for. And the nice thing in that particular case was that they actually went to the projects on the ground, and they were Kenyan-based projects. So the companies that were buying the credits could go back and actually see this is actually what we're paying for, to see that they were getting value for their dollar and actually see the projects themselves. So in that particular case, that's an example of an auction that went particularly well. And then it also, just as you said, they use it as a mechanism for price discovery, because otherwise, how are people going to know, just going onto our registry, to know the volume of credits, but they don't know where they're going to, and they don't know what the value is and what they're being sold for. And I'm not sure how converted you are in the carbon markets, but clearly you get different prices for different credits. A renewable energy credit you'll get a lot less for than a forestry type of credit. So it's important that we do have price discovery, that we can follow if there's any volatility in the market, what that is, and to see where the trends are. So in South Africa, you might see that in April, May, suddenly there's a large volume of credits, and then they disappear again. It's because they've been surrendered for carbon tax. So it gives us a lot more visibility into the marketplace.
Great, fantastic. Thank you. Nick, building on some of those points from the exchange perspective, I think the GAE recently hit the milestone of 500,000 credits traded, so congratulations on that. I guess what was the features from a platform and from the credit, and we touched on South African carbon tax, what were the features that kind of sealed the deal, if you will, for buyers with that across a platform and from a crediting perspective?
Really simple answer to that is supply. There's a shortage of carbon credits in the South African market. So structurally, how it is, we have a blend of compliance market with voluntary market. So what that means is, Verra, for example, is a voluntary registry standard. So what can happen is that you can then use those credits in the South African compliance market if they meet certain parameters. We have a South African carbon tax, which is slowly being implemented. So they've given businesses quite a bit of time with a lot of allowances to slowly get into pricing into their everyday business, because obviously to change the way you have been doing business for many years, there's often infrastructure changes that need to happen. So they need time to implement those. So we've come with quite a low base on the carbon price, but it's accelerating quite quickly. So in the next year, it's accelerating over 30%. So it's been a nice demand signal for projects, because obviously, now we have a certain amount of carbon that needs to be offset. So there are a lot of room for projects to develop these credits. But it's also created a bit of hoarding in our market, because obviously there's not a lot of assets to go up 30% in a year. So you have a lot of traders and companies buying credits for the future.
Great, fantastic. Anelisa, if I could come to you. Obviously, you've seen this play out in South Africa as well as a role as an exchange. So for your first tax eligible trade, speaking to that South African carbon tax element that Nick mentioned, what did, talking about buyers' behavior, I mean, what did they reveal to you about how emitters actually buy? I mean, were they testing price? Were they kind of warehousing them, as Nick kind of put, some experiences on your side of the JSE?
Yeah. So look, of course, I come from a background of operating commodity markets in South Africa. So JSE operates a derivatives commodity market, and we've built liquidity and trust over time. And of course, the market is robust. The instruments are well known, well understood, and standardized as well. A ton is a ton. It's tangible, etc. Price is negotiated in a transparent manner in a platform for trading. So really we operate that platform, people buy and sell, and then we settle as well. But what's been interesting for me in the carbon markets is that obviously carbon markets are quite nascent, they're new, and the product is not really well understood. Participants in the market are really working hard to build that trust, to build that credibility in the carbon markets. But maybe I'll touch first on the sort of experience we've had on the sell side with the suppliers of carbon credits. Really, these guys have been operating for a very long time, 15, 20 years, developing projects, issuing and selling carbon credits. So they're so used to, their bilateral deals So really to convince them to come on exchange or a platform has been really a humbling experience. I'll put it like that. But certainly something to work towards. And then just going back on your question just around the buy side and really the behaviors and what we've experienced from that perspective. So going back to when we were still just researching about how we're going to operationalize carbon markets from a South African perspective, we spoke to a lot of buyers, some listed companies, unlisted as well, just to understand their frame of mind when it comes to carbon offsets. So the initial reaction we got from these companies was that really the focus is on transitioning the processes to become more sustainable, and really they'll start looking at offsets, closer to 2030. But certainly, I think the conversations have changed. And we've been operating for about 2 years now. The conversation have certainly changed. I think it's a matter of realization, number one, that companies might not reach their 2030 targets. That's the one. Also, perhaps a lack of capital to deploy to actually make those changes when it comes to operations and becoming more sustainable. So that's why the conversation is certainly different. We've got conversations with clients who are even looking for like small quantities of carbon credits. We had one looking for 150 tons of carbon, which is not something that you usually see because the buyers usually go for big tickets. In terms of pricing, I think our last transaction was at like a $10 price for about 20,000 or 20,500 credits. So really that's a bit more than where the carbon tax is trading, which is always an advantage for buyers. And I guess perhaps my last point is that what's also interesting from our perspective is that you typically get the supplier coming from South Africa and the buyer coming from the international market. So international banks, international brokers, and hence I suppose we went for the structure we went with when we were developing this this platform or collaborating with our partners in the platform, really to try and build liquidity, not ring-fence the platform to just South Africa or just the South African context, but to bring in, buyers from the market, the global market.
Understood. So would you see that as the biggest unlock for more liquidity as the international players, or do you see it more policy driven here at home? Or if you had to kind of sum it up into one, what do you think is the kind of a lever for liquidity?
Okay, so
and this is coming back to you in a minute, Nick.
100%. So definitely policy is quite an important factor. You're talking Article 6 as an unlock. You're talking CORSIA as an unlock. And of course, from a South African context, the carbon tax going into 2020, well, phase 2 of the carbon tax going into 2026 and beyond. The relaxation of the not relaxation per se, but the extension of the offset currently is limited to about 10% that you can offset using carbon credits. It's going to go up to about 15% and gradually go up. So I think really those are the two unlocks. But what was important for us, and still it's important for us, is to bring in the international players. I really believe carbon markets in its nature are a global market.
Excellent, thank you. And Nick, is there anything you'd like to add to future liquidity unlocks for South Africa and maybe Africa as a whole that make it nice and tough for you?
Yeah, well, just back to what Anelisa was saying. There is the international aspect of the trading and the credits in the South African credits, but that mainly comes from the liquidity that the international traders have and the confidence they have in the market because they've been in it for a while. Whereas the South African companies are, it's new to them. There's been a shortage of credits, so maybe they haven't used credits before. So they are unable to do the deals probably the way that the offshore guys could do. But those credits will still find their way back into the South African market.
Yeah.
And that's probably where we have a little bit more, where we deal the South African market is the distribution to the local, to the local buyers and sellers. But yeah, there is the biggest problem that we see also is carbon credits haven't been classified as an asset yet. We're still waiting for National Treasury to do that. And because of that, when you start doing international transactions, you also have a reserve bank element to it, because carbon credits are intangible. It's not like I have a pile of them in the back. You need a registry and a number and the science behind it to prove that it is actually what it is, which is quite hard for governments to wrap their head around. It also makes them very easily transferable, which makes them prone to market manipulation or laundering money and those type of things. So there's a lot of intricate things within the governments and policies that aren't quite clear yet, but they are developing, and we are creating systems to do that, which is bringing more confidence to the market.
Excellent, thank you.
Can you just add? I think that also what's important as an unlock, was mentioned by Anelisa, is CORSIA and ICVCM. So in the past, these are international kind of organizations which attach a label, and what we're seeing from a standards point of view is that we're getting more and more requests from project developers and even governments for letters of authorization to authorize those credits. And it's just the uptake is almost like a hockey stick this year for us.
Yeah. Excellent. Thank you very much. So you touched on, Nick, their registries, which, something we want to talk about. So I guess moving on to the second pillar now, we talked about interoperability. It can mean different things for different folks, particularly in the world of carbon. But so if you say like integrity starts in the registry, where they have their house, for want of a better phrase, how do you make it visible on the trade ticket here? Talking about exchange focus. So how can a buyer click once and then, this credit counts for this compliance scheme? Is it Article 6 authorized? Wider use? Things of that nature. So Anelisa, if I could come on to you with this from the exchange view. So for producers selling credits, where do these attributes kind of sit? I mean, do they show up in your trade flows? I mean, how do you keep that visible on the platform? How do you kind of work in these waters?
Yeah. I mean, from the expansive platform, really, it's just we use tagging. Sorry, we use tagging. So you basically tag the project, or you tag the carbon credit. So when the user opens the screen, you can see that it's tagged for CORSIA or whatever the case may be. But what we're trying to introduce as well is tag carbon credits that are eligible for carbon tax in South Africa as well. So for ease of use, etc. But I guess what's important to mention is that we actually do the work before we tag the project. We ensure that there's eligibility. COHES, or the carbon tax criteria, is quite clear. There's just a list of things that a project needs to meet, or a list of criteria that a project needs to meet. So we've got those. And secondly, we also request the ELOA letters upfront to just ensure that it's there. So really, that's the work we do beforehand. And once we've certified ourselves that it really does meet the standards to a certain level, we tag the carbon credits, making it very easy then for the buyer to see and to interrogate the project even further, or carbon credits even further. We've got a link there that takes you to the actual project, a Verra or Gold Standard, whatever the case may be. And the website will have all the necessary documentation relating to the actual project.
Thank you. That sounds pretty streamlined. So I think from Heather, obviously you're the connective tissue there as Verra. So I mean, how does that connect to standards? I mean, so what is Verra doing to make projects and transaction data easier to integrate into exchanges in this regard? For you, what fields matter most, and how do you keep them current?
So obviously in the old days, we just had the registries. We didn't have all these other exchanges and platforms. So what Verra is having to do is to create APIs so that we can get these systems to talk to each other. And I also think to some extent what we do depends on the user. So governments also wanting to use these systems because they not only want to know which projects are in their country, which could be project data, what the labels are that it carries, whether it's Article 6 label, whether it's a SD Vista label, which is you can label a project according to the 17 United Nations goals. So which of those does it carry? Clean health, and that buyers obviously might be looking for that information. But a government might also be wanting information from us, the credits to move into their system, and then they have to have a reporting to United Nations. So they might have to report on how many credits are labeled, how many they've done a corresponding adjustment on. So there's different use cases that didn't exist 5 years ago that we're now creating all of these interoperability. Interoperability is quite a hard word to use, but they're using BI systems for like the ratings agencies, for example, or APIs. And then obviously we'll talk a little bit later about the linkage with S&P.
Sounds good. So, and then Nick, obviously, as a marketplace, knowing the buy side intimately, what's missing, from their perspective, perhaps? I mean, can you speak to kind of what they think might be tags for eligibility? I mean, what can you speak to with this interoperability?
From the local market, you normally just see demand for the South African tax credits. There's not a lot of South African companies that want to voluntarily offset their emissions. This is the compliance market, and they're doing it because they get a discount to the tax rate. So what we actually do is we separate the marketplaces, and once a carbon credit is South African tax eligible, then they kind of all trade at the same price. And how we usually work that out is a discount to the tax rate and then the cost of capital. So you can kind of get a book value of a credit on a month by month basis, but there is obviously because of the price increasing a little bit of a long end of the yield curve over there. Then in terms of the more local stuff, we do renewable energy certificates. So those are very labeled because certain companies want a particular kind. Maybe they want wind, they want a certain type of year. So we've actually launched time-stamped RECs now, which is obviously very interesting for someone like your hydrogen projects, right? So hydrogen projects, they're using energy, usually have their own energy, but maybe there's a certain time of production where they are pulling from the grid and they want to make sure that that energy profile matches what is coming out. So we've done the time-stamped RECs, and that is labeled as such. And then your more international type of projects. So in South Africa, you have your reforestation from like your specworm projects or your biochar projects and those kind of things. And those actually trade at a price above our local tax market. So you're seeing international companies and traders want those. And often, those high quality credits is actually a shortage of. So you're seeing offtake agreements from the project level rather than actual having the physical credits that then go onto the marketplace.
Understood. Yeah, I think it's 2029. The UK ETS said they're going to start integrating CDR. I think obviously everyone's looking at the EU legislation. Potentially huge area of demand. I know you've looked at biochar yourself.
Yeah, so biochar is a very interesting one for South Africa because there's 10 million hectares of non-indigenous trees, which by law we need to get rid of. And there's not a lot of countries in the world that have that biomass. So we need to get rid of them for water security, but it does allow us to have that biomass, which can be a huge creation of jobs and also really good for the farmland. Biochar is very good for farming. And like you said, as being part of the CDR and the UK with their announcement and the EU also now looking to use CDRs from outside of Europe, there'll be a huge demand for those type of credits.
Yep, plenty of interoperability ahead. On the topic of scalability now, kind of moving on, I mean, scalability isn't just more credits, but it's reducing cost and complexity without cutting the corners. So, we'll come on some of these frictions in a moment, but Heather, let's start maybe from your perspective. I know Verra have done some fantastic work over the last, I want to say 18 months, but I know there's been a longer build up to that, but the announcements are coming thick and fast for kind of digital tools. So if you want to talk a little bit about that perhaps, and perhaps maybe how that pipeline of data to exchanges, how it all kind of works together.
Sure, thanks. So I mentioned earlier that our process was manual. So you'd kind of submit your project description. We'd go and check all the calculations. You send us an Excel spreadsheet. There's sure to be mistakes in it. We'd email back. So it was a whole manual process. What we've done is worked very hard in the last year based on criticisms of the market and just trying to speed up because there was just suddenly a whole lot of projects that came our way, is that we've digitized the process. So we have a project hub, and you can now submit your documents automatically, which has a number of advantages in that there's reduced errors because it has a calculation tool in it already, depending on the methodology. And also you don't need to be an expert and understand all the algorithms and the methodology. You just need to upload the data and follow the fields that happens. So submitting is a lot quicker and it's a lot accurate, and we don't have to spend a lot of time checking it because using AI, it's not acceptable if the calculations are incorrect. So that's quicker. Then the validation verification happens, your project starts and was up and running. I don't know if you saw earlier this year, I think it was March, April, we were in Senegal and we announced a connection with Hedera Guardian. And so what will happen now is that I was literally in a mangrove up to my knees in mud, and the community can go along and use a QR code and actually start to feed the data indirectly on a platform directly into the Verra hub. So in that case, you're feeding in the height of the plants and the salinity of the water and the current flowing and that sort of stuff. So now imagine that works for a cook stove project where you've got IoT devices on every cook stove and you know how long it's being used for, or a solar system where you're using Ulster Class 1 meters to feed your kilowatt hours back into the system. So this means that we can now getting data back into the system quicker. And Verra's trick is obviously we don't want to know, if you've got 400,000 cook stoves out there every single minute that it was operating, we need to be working on our systems to get the information that's only relevant for the methodology, which is where we're working hard, is that you can then get your issuances quicker. So instead of waiting a year to get your issuances, imagine if you could get them every 2 months, which helps the projects, which helps the investors because everyone's getting their money back. So that's where we're trying to get to with an end-to-end arrangement. And then we've also signed a deal also with S&P, which you might have read recently, to update our registry so that all flows. And then not only is it improving the Verra registry and the flows, the letters of authorization, the information, the reporting to governments, but also hopefully there will be a meta registry above that, and that's where everyone can tap into with their API so that the information flows between the Verras, the exchanges, the B0s, the ratings agencies, and governments. So it will benefit all users in the digitization process at the end. We're leading it, but we're learning hard and working extremely hard to do that.
Yeah, it's a huge undertaking. It's gonna,
You know.
yeah, it's going to be a long time, but we're getting there. And I think the interesting part to that is, obviously, as you talked about the connectivity there, that connectivity layer of the meta registry will provide. And obviously, I just want to kind of dig into that a little bit more because I know Verra obviously speak to a lot of governments at the moment. The kind of how you're kind of having the layering, so to speak, maybe an accounting registry aspect to a transactional registry aspect. Can you talk about the nuances there a little bit?
Sure, it's a bit tricky at the moment because what's happening across the African continent is a lot of governments are putting policies in place and they're wanting specific things, but they haven't necessarily spoken to the registries and the S&Ps to see if it's physically possible. So it's almost as if the policies are coming out, but now we actually got to the implementation phase and we need to work out. So, for example, a government asked us if they could send credits back into Verra, and we were going, nope. Once they retire, they retire. That's the point of it. So that there's no double counting. So we're having to work out the policy landscape and the implementation landscape and what's physically possible. And of course, not compromising on the integrity in the market because we don't want these credits changed in terms of numbers that go to different places because then it becomes a different digital asset. So yeah, there's a lot of issues there now, but it's nice to be at that stage. And I foresee in about 2 or 3 years' time, we'll have ironed out all those wrinkles.
Yeah, I think even this year, I mean, we first met back in January in Abu Dhabi, and I think there's been so much progress since then.
There's been a lot.
Harmonizing, then become standardizing. We're getting there.
Yeah.
That's great. Thank you. So I think on the scalability part, I mean, it would be remiss of us not to be on the energy finance stage and not talk about financing. So Anelisa, if I can come to you to bring in that financing view. I know financing is a choke point for early stage projects. I know aspects of the JSE are trying to tackle that. Can you speak to that a little bit and shed some light?
Sure. So obviously, from an exchange perspective, we're really well placed to facilitate cash flows from investors or financiers to projects or initiatives. Really, that's our core function. And although we operate this carbon market, we realize very quickly that we will really have to work hard to try and support the market or emerging project developers with some form of instrument to help with financing. So we've got different entities on the JSE. The carbon market operates under JSE Ventures, and then we also have another subsidiary called JSE Private Placements. Now, all they do really is to match investors or financiers with different types of projects or initiatives. So the team, literally, their job is to go out there, look for financiers, partner with development banks as well, and then go search for projects as well, and really just put those together. And the challenge which most traditional financiers have highlighted, again, is that they're looking to finance projects which are bankable, that have proven records, etc., which makes it very difficult then for new developers or SMMEs. Because they can't do that. So really the question which has been debated at length in various platforms is how do we support then, we need the help of development banks just to help with the initial stages of development and the research and capacity building as well. And really, that's the gap we're trying to bridge there from a JPP perspective. We are hard at work trying to collaborate with an entity. Unfortunately, I can't mention the name right now. That's going to help us exactly with that. So give us access to funds that have patient capital. That's number one. They will also help these SMMEs with helping drafting documents, action design documents, monitoring, reporting as well. So really looking forward to having that concluded and really having a great impact on SMMEs and that are project developers. And then the other element, I suppose, from the listed securities perspective, is that on the JSE we've got a bonds market and sustainability segment in the bonds market. So looking at green bonds, sustainability bonds, and social bonds as well. So various projects in that perspective can also raise debt to finance their projects. But really, it's got very stringent requirements, obviously, and we usually support like big tickets because it's a security. So that's not really ideal for SMMEs, but it is another option or another product that we have from a JSE perspective. And the nice thing about the sustainability bond segment is that we've got various partners, and one of those partners is the IFC and the UN, where we, from a JC perspective, go out and look for potential bond issuers, whether governments or listed companies, unlisted companies, whatever the case may be, and the likes of the IFC and well, we do the initial screening, and then the likes of the IFC and the UNs then provide technical assistance, and issuers are also eligible then to get financing or financial support from IFC. So really, those are the initiatives that we're really trying to punt very hard, really for us to play our roles and really help the market.
Great, thank you. And I think also, Nick, if I don't mind asking you a similar point, because I know we talked about capacity building there, Anelisa. I know you do a lot of capacity building. You work a lot on the financing side. Someone who's ex-hedge fund as well, I'm sure you know a thing or two about the financing aspect. So could you speak to a little bit of what you're doing at the GAE regarding this aspect?
Yeah, sure. So look, there's a lot of carbon projects, particularly in Africa, but the carbon markets are very complicated. So there's a lot of fine print. There's a lot of things. I mean, it was heartbreaking. A guy called me from Ghana one day and said, "I've been planting trees for 20 years. How do I get my carbon credits?" So I asked him, "Where's his baseline?" And he didn't have one. So now he's not going to get carbon credits for those 20 years of work. So, there's a very particular order you need to do things in. And there's a lot of projects that aren't feasible at currently, and then there's a lot that really are. We do help a lot of companies structure their carbon work. So we put the whole financial feasibility together. And then what we'll do is we will find an expert in that exact particular type of carbon credit. So we'll go to them and then we'll help them look at doing the technical work, which is the stuff you need to give Verra in order to get all the credits. It's very particular. So you got to go about that in the right way. And there is a gap in that initial financing stage because this is a couple of R1 million to get to the point where you can hand in your documentation to begin the carbon work. And then there's also a very uneducated market here. This space is probably too risky for your normal type of investor or is out of their current wheelhouse. So there are specialist investors in these projects from around the world, and these type of events are great because you often meet some of them. And often then they would, if you've got the right documentation and the right team together, then they will invest in that project. So yeah, it's a lot of hand holding through the whole process. But there's a shortage of credits. So unfortunately, we got pushed further down the development stage of it. But it's also very rewarding. So it's nice to see those projects get off the ground on the bottom level.
I'm sure, and thank you. So I think staying with you on that topic, you talked about de-risking and hand-holding. I know one thing you do great work in is kind of that procurement as a service piece with the corporates and kind of helping to help it scale. So could you speak a little bit to kind of what you do on the platform around that and kind of escrow and counterparty risk and all the rest?
Yeah, so generally our buyers aren't too worried about all the other things. As long as they're getting their credits and they can use them against their tax offset. What we are seeing though is with the increased regulation coming, we are trying to be ahead of that. So if any regulation does come in, there's FICA, there's all those type of things that need to be handled. It's very difficult with the Reserve Bank and also dealing with them and helping them understand what these things are so that the money can flow. We do use an escrow service. Obviously, it's a lot easier when you're not giving them your own bank details for the distribution of those. And then we act as the service in that between the carbon credit traders. Before you send me carbon credits, I send you money. So we've separated all those things. We take possession of the carbon credits. The money gets distributed by an escrow service, and then we facilitate those two transactions at the same time. So at least there's full visibility and nothing can go wrong. There has been obviously some horror stories in the carbon markets in the past, but I think we're well past that now.
Yep. Distant memories. Yeah. So any prospective buyers of carbon credits, this is the panel to very much come to. Sounds very easy. So I think we're kind of starting to come up a little bit more on time. So there's two questions I want to ask everyone on the panel. So the first is obviously with about only 200 or so South African carbon taxpayers today, what one policy lever, domestic or international, would really move demand without stalling growth? So Anelisa, if I can come to you first. I know, what a question, but
Okay, I'm going to give you a winded answer. So, locally, I mean, you've already pointed out that it's only a few companies that are paying, so not all industries are subjected to carbon tax. But I think National Treasury has sort of given us an indication, that more industry will be included in the regime, but it's going to be in a phased approach, of course, taking into account sensitivities that come with that. And also, I guess, secondly, just the guidance around free allowances being reduced, and then the increase on the carbon offset, like I've spoken to already. So again, that's another direction that National Treasury has pointed out. So really, those two factors are somewhat going to help. But I think really what's really going to shift demand, I've already spoken to it. It is the Article 6, it is COSIA, and perhaps getting direction on CBAM as well, especially when you start speaking about renewable energy certificates.
yeah, CBAM's going to be a huge factor. Nick?
Yeah.
Maybe I can approach this on a more philosophical level.
Sure.
Whether we like it or not, there is global warming happen, and it is happening because of our burning of fossil fuels, and here we are, drill baby drill. The perfectly stored carbon is a barrel of oil. It is perfectly stored, but there are ways that we can create a lot of jobs. I'm not saying at all Africa probably deserves this time to use the fossil fuels in order to catch up with the rest of the world and develop it. Maybe we can skip a lot of the things that the rest of the world did to become more efficient, like renewable energy is available to us. But we should price the carbon into everything and just inflate our way out. We do that with everything else. We do that with debt. America's doing that with their debt. If there's a crisis, we do the same thing. We print more money and we inflate our way out. This is a crisis. So we should just add the value of carbon onto all the things and inflate our way out of this and let the new market discover the equilibrium.
Yep. Pass on to the end buyers, particularly if they're, beyond outside of Africa, right?
Exactly.
Yeah. And yourself? Heather?
So I would have said the same from an international point of view, COSIA and ICVCM, but COSIA, I'm seeing definitely an uptick in demand and airlines calling me and wanting credits at like $5 a ton and large ones too. So I agree with that. I think that the benchmarking that's going to change in South Africa soon for companies will mean that there are more companies which are more taxpayers. It is a phased approach. And then also there's another thing, the Climate Change Act, where municipalities are having to put in budgets, carbon budgets. And I was at a conference in Port Elizabeth the other day, and I suggested to them that maybe we shouldn't just be buying electricity and selling electricity on as the main form of income for a municipality. Maybe they should start looking at carbon projects themselves. But I think that will be just a little bit down the road a bit. It's not going to happen next year.
Got it. Understood. Thank you. So this last question, I think if someone leaves this panel knowing just one thing about carbon and RECs, stick to carbon maybe. One thing about carbon markets, what should it be? Nick, I'll come to you in the middle first on that one.
Carbon markets are essentially putting a value on the environment. And that is entailed in all of these things that we do. Energy is, just a stored form of carbon. So, this is a bit of a unique situation we're in here. It's probably new. Usually we talk at these things at these big carbon markets, but there is a value to the environment since our way to be able to include it in our capitalist system. So we don't have to go and rewrite the whole thing. We just have to find a way to value the environment within this, and carbon markets allow us to unlock that.
Great, fantastic. Anelisa?
I totally concur. But also carbon markets are a market-based mechanism, which is really essential to approach climate change, right? Or climate change mitigation. So it really provides indirect financing to these projects that will help us reach net zero. So we we don't necessarily need exchange, like we've spoken to the fact that there are bilateral transactions, but the carbon market and producing those carbon credits and really financing those projects and getting more projects will certainly help. So it really, my point is that it's an important mechanism that needs to be used. And of course, exchanges are here to facilitate, to help.
Yeah, it all starts with the liquidity curve, and
Absolutely.
exchanges take it through to that next stage. Absolutely. Heather?
So I think I agree with my colleagues on the board, and that essentially what we're trying to do is to change behavior. So if I look at all our methodologies, we have 50 methodologies which have been scientifically developed, through rigorous processes that underpin the calculations that, prove that this is a ton. We probably have another 70 new methodologies coming through the door, which I think is a positive sign in the marketplace, because everyone's looking at number of projects, number of credits, and I'm going, but we're getting new methodologies through the door, which indicates to me that, and for me, a methodology, no matter what it is, whether it's carbon captured storage, whether it's biochar, it's basically designed to get people to change their behavior, to do things differently. It's not business as usual. Climate change is real. So it's not it can't be business as usual anymore.
Fantastic. Okay, so what I'm hearing, if I can summarize a little bit, is that we need to obviously, there's a lot of capacity building that's required. There's a lot of blending of compliance and voluntary, and I think also the demand signals are certainly there. So I think on that, we'll start to wrap things up. Thank you very much to the panelists for joining us on stage. Appreciate it. I know we've touched on a little bit around SDGs. So again, just want to acknowledge and thank the United Nations Sustainable Stock Exchange for endorsing this panel as well today. And please give me a round of applause for our panelists, and thank you for your time.